Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the Russell 2000 index, ticker symbol RUT. And if you followed along with our report that went out last week, then you're not surprised to see the markets lower today. However, if you missed that report, you might have been a little surprised because the market gave us a head fake at the beginning of the week. And while I did forecast that we would be higher on Monday and Tuesday, and that's exactly what happened, the markets eventually closed lower as forecasted. Now, as I do each and every week, I leave the lines on the chart so you can see the evidence with your own eyes about how well technical analysis works as a forecasting tool. If I zoom in just a little bit further, you'll see that this red line right here was what I forecasted for the Russell 2000, with this being Friday's candle from last week. Remember, none of these candles existed, or none of them were on the chart when we recorded last week, and so it was just that diagonal line that I drew, with the end of the line being the target right there. And isn't it absolutely amazing how well the market followed that line? And we closed literally within pennies of the end of the line. We hit the end of the line during the course of the day where we reached that low for the Russell 2000. And so, again, like clockwork, the candle charts told us exactly what was going to happen. Now, with that said, what does that mean for next week? I'm going to have to back out just a little bit, because if you look down here at this line, that's the K line, the percent K for the stochastics indicator. I'm using the slow stochastic, and you can see that the momentum is still heading lower on the stochastics. So what I think we'll see for the Russell 2000 is going to be a little bit different than what I'm expecting with the other markets. With the Russell 2000, I think we're going to see continued momentum to the downside. So what I'm going to do right there is just extend it a little bit lower. I'm going to extend that trend line out because I think we're just going to continue on that downward trend. And then eventually, I think we're going to see a little bit of a bounce towards the end of the year. Remember, we only have about 2 weeks left until December is gone and we start to welcome in 2019. But I think we'll see a little bit of a bounce towards the end of next week. And that's going to be my forecast for the Russell 2000. Now, for the diamonds, which is the ETF for the Dow Jones Industrial Average, you'll again see that I left my lines on the chart from last week's report. It's hard to see this one, but I'll highlight this for you in blue right now so you can see that. Last week, I forecasted that the markets would go up Monday and Tuesday, and then I said that we would most likely drop towards the end of the week. And that's exactly what happened. Look at that. Monday we were up. Although that was a red candle, we opened up right here. We closed lower. The next day we had a higher low, higher high, right at the pivot point that I made last week. And then we started to go lower. Thursday we had a little bit of a spinning top right there. Today, Friday, as I record this on the 14th, we gapped down on the diamonds and again came very close to hitting the end of the line target. What I think we'll see for next week is again continued momentum lower, and then I think we'll make a move higher. So let me scrunch this a little bit on the price line so we get a little bit more drawing room. So I think the Dow is going to continue lower Monday and Tuesday, a little bit opposite than what we saw this week, before we'll see the bounce. And I do think we're going to see a bounce that will bring us back to this gap fill target. I'm going to put that target line right there because this is a critical line that we all need to pay very close attention to. Remember, when I pulled up the diamonds last week and I showed you the monthly chart, I showed you this trend line, and then I showed you the accelerated trend line that I called the Trump effect in 2016 when President Trump was elected, it accelerated the trend. But look at this. We closed today with that candle being below the trend line. Very, very important note to point out. If I go to the weekly chart, you'll see, again, we have a red candle at the end of this week, and we are officially closed below this trend line. Now, historically, what we usually see when a major trend line like that is broken is we will see a continued downward move before the market makes an attempt to retest that trend line in an attempt to get back on track. I do not believe that we are going to get back into that upward trend. In fact, what I think we're going to see is that former trend line is eventually going to turn into resistance. But I do think that next week we're going to retest that to try to get back on track, and then I believe the week after that we're going to fail. I'm being an optimist here, saying it's going to fail because you can make money on the way down. In bear market strategies, especially for option traders, you can make faster money on the way down than on the way up because people tend to get emotional and fear creeps in, and eventually capitulation takes over and we see trend reversals. So again, I think we're eventually going to see a down market, particularly in January. I'll report on this week after week as we get into January, but I think we're going to see a down month for January, and we could make money in a down market, like I just said. So that's the diamonds. Initially, Monday and Tuesday lower, and then we'll see a bounce towards the end of the week to make an attempt to fill that gap. Let me correct this angle because I'm going to make sure we get 5 candles in there for that week. So I think we'll see it just like that. All right, now let's move on to the spiders. SPY is the ticker symbol for the ETF there. I said, just like the Dow, I said we would move up Monday and Tuesday. What happened? Monday, Tuesday, and Wednesday we went up, and then Thursday and Friday we had big down days. And notice what's happening down here. We see this long candle on red volume. That means that the acceleration to the sell side is taking over, and look at the stochastic. We have a downturn in that momentum. So again, I believe that the S&P, like the Dow, is going to continue lower. So let me erase this line. Eventually, I think we'll hit the end of the line as a target, but it's going to look something like this. Monday and Tuesday lower, Wednesday, Thursday, Friday possibly higher, just like that, to fill this very minor gap. Let me get rid of this line, and I'll redraw the gap fill point as a resistance point right there. And then I think we can move lower from there. So I know this is crazy, me predicting down, up, down movements, but that's exactly what we do here at the Market Guys. We are short-term forecasters who follow the technical signals, and we do it very well. Our percentage of accuracy is extremely high. It's the best in the world, and I hope you are trading accordingly and looking at these reports and setting your stops properly. When I say there's going to be a down market and you have a long position, the best thing for you to do is to protect yourself against a downside movement, or move to cash and wait for the downturn so that you can get in at a better price. That's how we swing trade the markets. Now, the S&P, that's my forecast. Look at the VIX, because the VIX is a contrarian indicator to the S&P. And as I said, we would most likely pull back on the VIX. We did that on Wednesday, and we started the bounce Thursday and Friday. Eventually, I think the VIX is going to move higher. So I'm going to leave this in place, because if the VIX moves higher, the S&P is going to move lower, and eventually I think the VIX will hit some resistance up here and then maybe pull back. But I'm going to leave that just the way it is. I think it's perfect. The end of the line will be the target, and that would bring us to about 5 candles in this distance on the chart, in this space right here. Okay, so that's the forecast for the VIX. Finally, if we take a look at the Qs, this is basically the Invesco QQQ Trust. It tracks the NASDAQ market. You'll see that my downturn here was correct. We are moving lower, but we haven't hit that target quite yet. So I'm going to leave that in place as well, because I think the NASDAQ will move lower, and you see this little turnaround point, that pivot point in the stochastics is telling us that the momentum is again shifting lower. So I'm going to forecast the stochastic as well, just like that. And I think eventually it'll bottom out right around here, right around that level, around 13, 14, and then it'll start to turn up. So keep an eye on that. If you're unfamiliar with the stochastic oscillator, go to our website, go to the video page, and you'll see that there's an educational video. It's about 7 minutes long, talks about stochastics and how to use it as a tool, not just for forecasting, but for risk management as well. So that's our weekly market report. I hope you enjoy the information that we put out each and every week. Follow along, tell your friends about us, and I will be in touch with you next week. Have a good weekend. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.